All right, good morning, good morning. Apologize for the delay. Just some extravagant events uh, on the personal level requiring travel. But I think we're all good to go. So if anybody could please tell me what they hear, what they see, and I also need to check. And I also need to check. Mr. RDK, good morning as usual. Mr. RDK, please check your PM whenever you. Oh, beautiful. See and see perfectly. Yeah, please check your PM if possible. I need to reschedule a little bit. Vanchin, good morning. Vanchin, I think your question is when mainnet. So you can ask this question again. That's a tradition now to make me react every freaking time. Okay. So how many people watching us? Let me see. The connection is loading. So a number of things to cover. Lots of those things that we're going to be covering this and for the following many weeks is related to Ghost DAO. Pretty technical, pretty like technicality related things. So to get a better idea, you need to start reading on Olympus DAO as much as possible. There's lots of information online. Do not think that these calls will. I mean, these calls should be treated more like in when you go to university, like lectures. A lecture is an hour. It's not a substitute for 5 textbooks for that specific class plus some additional literature. So do not consider this whatever hourly community calls plus whatever the Wales Wednesday. Wales Wednesday is just discussions per se. You should educate yourself in your free time, and then come here with ideally with specific questions, so some predispositions regarding uh, your understanding on the matter, and then either um, confirm what you thought or reject what you thought or disagree based on your findings. Otherwise, it's going to be very difficult to understand what we're talking about here. Let me just like 1 sec. Let me just see how many people do we have today. Based on this, I'll be adjusting the material that I would like to go over. Um, okay, we have some people. Okay, good. All right, so not a lot, but we have good number of people. So on the Ghost DAO side, when we spoke about how the design is super wholesome, yeah, I'm still under that very much impression that it's extremely wholesome. And a couple of things regarding like Olympus Down, potentially why the project went through some uh, bust. Um, Let me actually find it as well. Again, I'm not as prepared as I'm typically given, some travel situation. But we'll have a great call because I have a lot of things to say. The team in particular found lots of bugs. So we're still trying to understand what specifically happened with Olympus. Like, why, despite such massive popularity, why did it drop? Right. So let me just launch this, show you the chart one more time so you have a better idea. And here, right, so the market cap collapsed, and kind of would be nice to know why, right? So we're still trying to understand. You have different theories. The easy answer is, of course, because lots of people started selling, but that's not enough. And that's not enough of an explanation. And then we also think that it's potential. So probably it's a composition of factors. Let me just go over these factors because here's the thing: like, if you just do the same thing, more conservatively and without bugs, essentially, there's a very good chance that instead of this trajectory, where it's like exponential growth and exponential decline, you'll just have a more a flatter yet exponential upside, right? And one aspect that we're thinking about why, like what happened is, of course, P Ghost, right? So P Ghost, the nature of P Ghost was the investors would get at $1. So investors would like invest in the project. They would get certain allocation of P Ghost, and then P Ghost is an option for them. So P Ghost, they pay $1 and one P Ghost, well, $1 and one P Ghost, and that is equivalent to one E Ghost. And then they, they essentially, when the price reached, like, that's market cap, when the price here say reached $1,000 per E Ghost, they would just, they would just pay $1 and they start selling, right? So what do we have as solutions against that? So for us, maybe, and that's part of the discussion that we need to have. And for those discussions, we need to be very prepared. Again, if you're discussing something on Whales Wednesdays, you guys need to be prepared. Otherwise, this discussion makes no sense. In fact, I'll probably be forcing new rules on Whales Wednesdays, including if there are no comments in the file 24 hours before Whales Wednesdays, we're just not going to hold it. There's no freaking point. With all due respect, we would love to speak with all of you guys, but preparing for the call and maintaining the call is just not, like, makes no sense. Like, makes zero sense. So if nobody's prepared to, factually discuss what they learned, there's no point for this call. I mean, again, with all due respect, because this time, the time is so limited. It's such a limited resource right now. It's way more efficient for us just to spend it internally, discussing certain things, as opposed to organizing this call, do this for the community, and then deal with the repercussions, do with the preparations. It's just too much. So you guys need, like, because I know we discussed this, like, P Ghost to GNV situation so many freaking times. There's so much stuff on POM, which is the predecessor of P Ghost. There's so much stuff online you guys can read and find out for yourself. And then come prepared, right? Like, actually have a factual discussion. Maybe have some modeling, right, done. Maybe some financial analysis. Like, doesn't have to be super specific. Nobody is right or wrong, right? We're discussing, but it needs to be a discussion. Like, it needs to be like, yes, that's what like, everybody needs to be prepared. Otherwise, it makes no sense. So what we discussed, super high level, is GNV is a FATSA, right? So one GNV is one FATSA. Now the question is, how do you get it? So there are lots of ways how some people abused this whole GNV situation. They just minted lots of NFT tokens, NFTs, and got fake referral rewards. They invited lots of bots. Like, we have so many bots that join the group now. I mean, clearly it's like bots, right? I mean, these bots then go ahead and join the Ghost Airdrop bot, but those are not real users. Like, there's no point. Yet people still get referrals for that. So how do we deal with those people who got a lot of referrals, but didn't really do anything for it? Like, I mean, they did something, but it's like just not worth. Like, the amount of JV is just not the amount of JV that may translate into FATS is just not proportional to the effort that has been invested into it. So what do we do? So that was one idea, that instead of $1, maybe a person needs to bring in like one JV plus whatever is the backend at the moment. Like, if the backend at the moment is $35, cool. So a person brings one JV and one FATSO, right? So you get one JV, you get $35, and in exchange you can go ahead and sell it at 960. That's like a 20, almost 30x upside right there. So that's one option. Another option that we also discussing is even more aggressive, right? And again, the issue here is not to punish like proper whales or proper council members. The point is to punish, penalize those who abuse the system. And of course, that was done as a honeypot because through these referral programs, we still got a lot of users. There was definitely some conversion and stuff like that. So it was not useless. It was very, very useful. However, we need to put proper barriers and proper limits in place to limit those who abuse the system. So maybe we even go with what I described last call. So this is called RFV, right? The backend, which is at $35. Maybe go with MV, market value of it, because the market value of it is so much higher than 35. At this point of time, I think it's around 100, and you still get a 10x upside. Like, each JV now has to put $100 to the treasury, significantly enhancing the treasury, and then go on a DEX and sell it there. So, and then on the treasury, unless you guys don't know, like, here's the current balance, $410,000. So $410,000 made it all possible. So it's not even $1 million yet; it's $500,000. it's all testnet on Sepolia, but it shows good dynamics. So $500,000 gives you 11 million of market cap, which is 20x. And we purposefully trying to minimize the ratio in between. Like we can actually, soon we'll be launching so-called LP bonds. So those LP bonds will be very, very useful in expanding the entire mechanics. So just to give an idea, based on the math that we found, and we'll be introducing this math in more detail in documentation very soon, which again will be probably more confusing than you just playing with this goes down thing. So what's going to happen with the bonds is the bonds can either minimize ratios or conversely increase the ratios. So make the project kind of more fundamental or more diluted. So essentially, like think about, more fundamental like Coca-Cola, right, or Caterpillar, or ExxonMobil. Like think about like heavily production-oriented businesses that typically funded by debt. Like maybe the debt ratio is like somewhere like within 40%. Like 40% of your assets is borrowed loans because you need to maintain your operations. So like heavily production-oriented businesses where P ratio is pretty low versus say the likes of Nvidia or Tesla. Actually, Nvidia's P is actually not that high because they did produce a lot of revenues in this short period of time due to this huge run for GPUs. But when it comes down to say Tesla or even Amazon, like those are pretty inflated. So there's not enough production. It's more like hopium, whether realizable or not, that is being sold within this P ratio. So, and then we can do similar thing, right? So that's why it's a economic system where you can either expand the ratio between this, right? Like currently it's like say 30, right? So you can either expand this or dilute it. So I'm not sure if you guys remember on the last call, 2 calls ago, we had like this ratio at 150. Today it's at 30. So we significantly decreased it, significantly making this protocol a lot more fundamental in nature. And but there are bugs, right? Some of these bugs have actually been mentioned on the Whales Wednesdays as well. The Whales Wednesdays call was at this point of time related to bonds. So whatever the topic of the discussion, every single topic has so many freaking angles and details. We need to stay on topic during these calls to make sure the discussion is actually fruitful. However, there has been some comments regarding the circulating supply exceeding this total supply, and that's of course cannot happen. However, it did happen. How did this happen? Is because Olympus DAO had a bug, and when we started diving in, it actually had more than one bug. It actually had so many bugs. So, with all those bugs, what happened was when you do certain things, when you stake initially, you can significantly overshoot the total supply. So this can never happen. The circulating has to be lower than total. And we strictly followed the code of Olympus. We didn't fork it, we rewrote it. And then since, after discovering this bug in the beginning of April, about a month ago, we just didn't know how to fix it. We didn't know what was the origination of it. We finally found, not us, the dev team, finally found this out last week. Kudos to the dev team. Like, dev team literally could not, the members of the dev team couldn't fall asleep, pulling all-nighters, like trying to identify what the fuck was happening. So they found out the error, fixed it. What was the error? The error was in the order of operations, essentially. So like what happens is, do you stake? So when you stake the funds, do you account for the staking rewards first and then send the rewards, or do you do it differently? And it's not like as easy as I'm describing it, but I'm literally diluting it to the point where if the supply is increasing due to staking rewards, like staking rewards, let's assume the APY is 5%. So your staking rewards increase by 5% per year. So if it increases by 5% a year, what do? Do you account for those 5% first and then send the rewards, or do you send the rewards first and then account for the 5%? So in Olympus' case, it was actually you send the rewards first, then you account for it. And it was a super difficult. That was the nature. That was the the essence of the error. It was extremely difficult to catch because it was not evident. It only happened with if statements, like a bunch of if statements, if they do happen. And it happened that this if statement did get triggered in our simulation on Sepolia, leading to this. And a couple of people took advantage of this. I mean, not knowingly, but of course, hackers could take advantage. Again, it had to be a super specific set of events. However, going back to this, right? Going back to this scenario, why did it sell? First of all, because of P ghost. The other thing that could have happened maybe the members of the team, we're not trying to accuse anybody, right? Like we just like it's a theory. Maybe members of the team originally of Olympus, caught this bug because they were the first takers. This could happen to the first takers. They caught this bug and actually permitted a huge, like a shit ton of, S ghosts to themselves. So now they have a huge supply. How do we know that potentially? How do they know that they were aware of the error? Because they did fix it. The fix was pretty stupid. It was okay. Let's put it differently. The fix was very elegant given the situation, but it was a pretty stupid fix. Like it was a pretty stupid situation that this fix even had to take place in the first place. So the fix was elegant given the consequences, and they did fix it. So they were probably aware of the error, but they didn't tell anybody about it. Not only that, but somebody did ask, like in the GitHub, they made a commit asking like if anybody encountered this error, if anybody encountered this bug, vulnerability, and Olympus DAO did not respond. Although that very bug was fixed around that time. So it's very interesting. They didn't want to. I mean, I'm not sure what like it's a very sensitive, touchy situation, but I don't think they. I mean, to my knowledge, I don't think they communicated that there was a bug. But maybe, just maybe, not trying to make any accusations, they permitted mistakenly huge supply unproportional to their initial investment, and they were the ones unloading it at these highs. Right. So like, there are lots of things that could have happened. Like we're still trying to understand what was behind this specific collapse. Not only that, but we also understanding, like for us, for example, currently to fix this, what we have to do is significantly increase the APY. So to many of you, like so here, like the APY shows infinity. In reality, the APY should not be infinity. It should be a number, say 10,000%, like 100%, whatever. Our APY currently is fixed at 69%. However, it's not showing at 69. The reason why it's not showing at 69 because if there's an error, meaning if there's a dissonance, misalignment between circulating supply and total supply, then put infinity, right? So it's also kind of like a UI type of resolution around the fix. However, it's not supposed to be infinity. And there's also like another bug that we kind of made ourselves, like Olympus had nothing to do with this, put different time frame because every single rebate is supposed to be 8 hours. So this APY then changes depending on what you see every single 8 hours, and this makes it a lot more dynamic. Currently, the situation with GhostDAO is kind of static thing, like you just come when you come. In reality, it's going to be every 8 hours, something will be changing. Certain metrics will be changing. Every 8 hours, there's a timer. You know exactly when that happens. So it's easy to track. It's easy to trace. It's easy to kind of to track the progress of the protocol. So those couple of mistakes that we made while deploying on Sepolia, and not couple, but at this point of time, almost 5 pretty significant bugs that lead to misalignment between circulating and total supply that Olympus DAO team made. Some of those bugs have been fixed, some not, and we're trying to catch more and more of those extravagant use cases that we'll fix before deploying on the new chain. Any questions here besides Vanchin when mainnet? Vanchin, thank you so much. I appreciate the question. To get the answers, all you do is just go back to previous 1,000 podcasts and just rewatch, re-listen what I mentioned. Okay, how many people watching us? Because that's I need to understand what am I discussing today. Just a second. Okay, we do have a little bit. Okay, 6 people watching. Okay, cool. All right. Okay. What's next? So these bugs will be fixed, and what's going to be the next blockchain to launch on, testnet to launch on? So chances are, let me see if I can switch the screens. Boom, boom. Yeah. So chances are, it's going to be one of these testnets here. So Relaph and Sepolia will have to redeploy at some point of time. Now, what to do with your ETH? We'll be redistributing that ETH back at somehow. So at this point of time, Sepolia is a great source to play with. You should keep playing. We will be playing with it for the next, some time. Despite bugs, it's still I would say a 90-95% version that you'll experience in the mainnet as far as the entire dynamics. The most important thing is forget about staking for now, forget about APYs. I think the most important thing is how to fill the treasury, how to make sure the backend is increasing, how to take what type of what to pay attention to when it comes down to ratios, like how to make it sustainable. That's 99% of the importance, right? As far as staking, as far as rebates, as far as all these like cool marketing gimmicks, some of which are related directly to tokenomics. That's very important as well, but kind of secondary. So Sepolia is good. The next one is probably going to be Hudi, as we described before. So start mining Hudi today. That's my suggestion. And then the question is, which ones of these will be next? So we just speak with, thanks to a community member, we spoke to Pulse. We have a group with them. They're adding more and more people, and maybe it will be a good idea to launch on Pulse as well, maybe even more or less simultaneously between Hudi and Pulse. And we would like to prepare some type of documentation by then. So, but again, documentation is going to be, how to say, it's definitely going to add more seriousness and foundation to what we do. I don't think it will add a lot of clarity. I mean, let me just say why, right? Like, if you want to get clarity, there's so many resources already where you can read them. In fact, some of them are linked to this document, right, that we're discussing. Some of them links to the document that we're discussing during the Whales Wednesdays. Some links have been dropped in Whales, so you should read those articles in detail. Those are not the articles you read, just like scan through, 10-second read and then you're done. No. You have to, first time you're reading it like you're reading like Chinese, like different language. And then second time you're reading, now it's easier. And then by time number 5, you actually start understanding what the hell it says, right? So start reading these sources. Now, what we're going to be presenting in documentation is going to be in addition to what you could find on those public sources, and fixing the errors that you could find in these public sources, definitely in code, but also in descriptions, because there's not a single article that is in detail covering Olympus DAO and at the same time 100% correct. They're all wrong. So start minting Hudi and then Pulse. And before we launch Pulse, since like Hudi will be like no support, like we'll just be playing ourselves, right? Pulse will probably gonna get Pulse members support. We'll see. And it will be interesting to see like this like active testing from a new community, not related to Ghost, how they'll be reacting to this protocol. And then we'll be showing user interfaces connecting Sepolia, Hudi, and Pulse testnets. They're not going to be cross-chain connections yet. There'll be more multi-chain user interfaces. Multiple user interfaces that will be connecting the different metrics together, different ratios together. And the reason why that's important is because when you decide what to bridge, we need to understand what type of metrics do you guys need to see to make a decision regarding arbitrage opportunity. So this is going to be just a difference of prices. This is going to be difference of ratios. This is going to be difference of indices. This is going to be everything. How to properly locate it to not make it super crowded so you guys actually understand it. Where to put different action buttons and stuff like that. So like all these interesting things. And then after we do that multi-chain stuff, then we do cross-chain. So like just to sum it up, we do Ghost DAO testing one chain, which we do now. Then we add 1, 2, 3, 4, 5, 6, whatever chains slowly but surely. Then we start adding multi-chain user interfaces, right? Like panels, whatever you call it. And then we add the cross-chain stuff, right? So that's the progression. So that's the next step. Mr. IDK is asking, will there be a Hudi faucet listed on block? Yes. So first of all, there's a great Hudi. That's a great question. First of all, there's a Hudi testnet faucet that exists, no KYC, so you can start minting it now. But we'll be also definitely adding our native faucet on Ghost as well. Obviously, also no KYC. You'll be able to request it very soon. It's easy to Hudi Ethereum is, I think, 20x more efficient to mine than Sepolia. So Sepolia can maybe mine like 1 ETH per day. Hoodie, you can mint 33 ETH every 12 hours or so. I'm not like depending on your computer speed. So depending on my computer speed, I was able to mint 10 to 15 Hoodie per day, versus like on this other computer, I'm able to mint, let's say, around 33 Hoodie within like 12 hours, literally. So yeah, so it just depends on how much free resource, free CPU, free, they call it cores, right? You can allocate to minting it. So yeah, so those are quite exciting plans. So Hoodie, I think, will happen within a month. We'll probably be launching this within a month. So watch out for sure. Get as much testing as possible on Sepolia with bonds, and read on Olympus. Like, you need to read on Olympus, understand what's happening. Our docs will be coming up soon, but again, our docs will be more in detail, so potentially more confusing. We'll try to make it easier to read. We'll try to make two types of documentation: one like docs, like for GigaChat/nerds, and one like more descriptive type of like ChatGPT type of rewrites based on bullet points. More like English format. Problem with English format is you understand the English format, but you still don't know how to fucking actually make money with it. Right? So there's no point for this soy bullshit. Like, we need to give you guys real meat. Like, we're not trying to be difficult. We're not trying to be like extravagant. We're not trying to be extraordinary. We're not trying to be anything. We're trying to give meat on the table that will actually enable you to monetize this protocol to the highest capacity. That's the motivation. There's no other motive. Like, there's nothing else. Our goal is to share the knowledge to the deepest. So when we go open source, we also share everything we have. We're not trying to simplify things. We're just trying to show what it is, right? That's the thing. Because there's no limit to oversimplification, to the point where if you try to oversimplify this world, then the biggest innovation is communication. That's it. Because every single other, and even communication leads to wars and stuff. So it's also destructive because there's miscommunication, right? Like, the biggest innovation was people speaking to each other. If you try to really if you try to oversimplify everything, then that's going to be oversimplification. So there's no limit to this. So we should stop working on planes and ships and cars, and just distribute, just focus on speech, which is not true. Okay. Or maybe it is. What else do I have to share with you, ladies and gentlemen? There's one more thing. Yeah, I think maybe so to start diving maybe slightly more into the formulas one more time, right? So let me share this a little bit. Yeah, I think you should be able to see it. So going back to the formulas a little bit. I personally think the most important thing is trying to understand how to set the ratios. I think that's the most important. I think that's like bonding specifically with how to set these bonds. And then for the users, including us, right, how to then buy these bonds. Like, what's the limit to buy it? Like, when should you buy it? That's the 99% question. And these bonds will have critical role, instrumental role for us, for the bridging as well. Because what we're thinking is, every single time somebody is bridging, once the system reaches certain equilibrium, every single time somebody is bridging, they are creating an imbalance to this equilibrium, thus automatically creating bonds. So we'll have auto bond creation through bridging. And that's going to be amazing. So the two ratios that we should be looking at, I think, the first thing is, the first ratio that Olympus was focusing on is market cap to treasury. Now, this ratio is equivalent to eGhost price on the DEX to the backend per eGhost, right? Now, the reason why these ratios are equivalent, they're not similar, they're equivalent, is because you get you get market cap by multiplying eGhost price times the supply of eGhost. And similarly, you get the treasury by multiplying backend by the supply. And of course, mathematically, you just cancel the supply and you get this. So they're not just similar, they're identical, literally identical, one for one, like literally the same. That's what they focused on, but as described, the backend was in relation to the price of 1 ohm, in our case 1 ghost, to be equal to 1 DAI. And I don't think that's what we should be focusing on. I think what we should be focusing on is expanding the price of E-ghost, which is super beneficial for everybody. But not only that, it's not that beneficial for everybody. It's not just beneficial for users, for whales, for council members. It's also beneficial for the treasury. That's the most important part. The treasury can then be self-sustainable, thus becoming sustainably beneficial for everybody involved, thus incentivizing everybody to just stay within the system. If everybody starts selling Bitcoin today, Bitcoin will drop to $1 and to zero. And, well, not to zero, to like 0.00001, right? And the reason why, and that will happen a lot faster than most of you guys, can imagine. So you have 100% of supply of Bitcoins. Let's just round this up to 21 million. Let's assume the whole Bitcoin supply is distributed, so we have 21 million. How much Bitcoins will it take for it to drop to 0.0001? Not 21 million, a lot less. If somebody starts selling 1 million Bitcoins right now to the market, dumping this on the market, chances are it's going to be like, it's going to drop from $90,000 that it's trading at today. It will probably drop to $10,000, if not $5,000. The reason why it's keep holding is because I forgot the name of it, but it's essentially very similar to circulating supply divided by the total. So, and those ratios exist everywhere in the economics. It exists with every single asset, whether it's gold, whether it's Bitcoin, whether it's stocks, whether it's foreign exchange. In foreign exchange, if you guys don't know, so within current Keynesian economics, where money is being created through credit, so when somebody's issuing bonds, they create money. The total money supply on the market, circulating supply, aka cash, is negligible. Literally negligible compared to the overall quantity of money created in the system comprising of debits and credits. So if you take all the active supplies of money and then you add to it credits like you said, bonds and treasury bills and all type of stuff, and you create some type of fraction of essentially M1 plus M2, that's actually an interesting stuff to find out. M1 plus M2 divided by the total supply of all the money plus the credits. This, I believe, I'm not sure. It actually will be interesting to see, but I think it's going to be negligible, like probably less than 1%. If you guys do know, please tell me. Would be nice for me to find out as well. But same thing when we do cash, like specifically, well, M1 and M2, that's kind of like cash, right? So that's like most liquid assets, treasury bills, cash, and stuff like that. Everything short term. So maybe that's 3%. It's last time I've read, but something is telling me if you add all the credits, including the credits in the BIS created by the BIS, which includes interest rate swaps, which are just fucking insane. All foreign exchange swaps, which are fucking insane in size. Last time I checked, while the total GDP of the world was around, let's round this up to, $100 trillion. The amount of outstanding notional by BIS, according to BIS, which is Bureau, I think, of International Settlement. So those interest rate swaps, equity swaps, foreign exchange swaps, credit swaps, everything together was around 600 trillion. So it was like 6 times the GDP of the world. So imagine, like, we owe to each other 6 times more than we produce every single year, which is quite insane. So since that's the notional, and then this number is every single year, and by the way, at that point of time, I think it was not 100 trillion, I think it was actually 75 trillion. So it's not necessarily a fair comparison because BIS is a notional on the assets as well, right? While $75 trillion a year, that's what should we produce every single year as a community, as a global community of all 7-8 billion people in the world. So maybe that's more fair to compare this not to 75 trillion, but to the GDP of the world. Last time I checked, could be mistaken, we have about 400 trillion of all the assets, including real estate, stock markets and stuff like that, and therefore we have about $600 trillion of essential of debt. Right? This is assets and this is debt. So our whole world is 40-60. We leave like fine companies from the S&P 500 which are focusing more on production, such as Coca-Cola. Although I think the proper ratio should be the opposite. So this is 40-60%, right? 40 to 60. I think the proper ratio should actually be the opposite. It actually should be 60-40. 60 equity, so 60 assets and 40% debt. So obviously this stuff is reversed, hence we're experiencing many risks for potential recessions or inflation. Why inflation? Because inflation needs to increase, like essentially what the world is trying to do. The world is trying to minimize this ratio, so maximize this ratio. How? First option is to minimize debt. Second option is to maximize assets. But how can you maximize assets if you don't produce more? Well, you inflate the price of these assets by inflating and one of them too, right? So once you inflate the current supply of these, you are inflating the price of these assets. And how to inflate the price of the assets is very simple. Like that's a freaking trick. That's partially being used by GhostDAO, by the way, and obviously everybody else. Like GhostDAO is not unique in this situation. What's happening is, let's assume you have 100 houses, right? Let's assume the current price is $100. Okay. Do you need to like if you so therefore the total assets on these 100 houses is $10,000. Okay. So what do you need to do in order to market at a higher price? Because this 10,000, right? That's counted as assets, part of this assets. But you need to increase the assets. You need to minimize this ratio. So what do? All you do is you buy 5 houses in the neighborhood at a higher price. You either buy it at a higher price or you inflate it. You do market research analysis, and you say, hey, you know what? These houses now not selling at $100 anymore. Now they're sold at $200. So you only did invest $1,000 total. But what you did, the entire neighborhood now is trading at 100 houses, same 100 houses, right? But not every single house, although only 5 got sold, bought, whatever, estimated, re-estimated. 100 houses times $200 now is equal to $20,000. So by investing just $1,000, you created extra $9,000 of actual value on a piece of paper, of course. Right? So you doubled it. So that's what the world is trying to do. They're trying to inflate these assets because the amount of debt is too high. And while inflating assets, they'll be essentially minimizing this ratio. Or the other option is just to minimize debt. But I don't think we're going against that vicious spiral. I don't think they'll be able to not take debt because they're so used to it. Because debt is like a drug. It's more addictive than heroin. Some people say it's probably more addictive than monthly salary. As Philip, the author of the Black Swan and Skin in the Game, said once, there are 2 drugs: heroin and a salary. Okay, so same thing we do with the DAO, right? With the GhostDAO. So this ratio that we have, we need to essentially minimize it, and that's what we need to be focusing on. So while Olympus was focusing just on E goes to backend ratio, we potentially need to be focusing on 2 ratios. So there's like market price of eGhost, and then there is an actual market value of the backing, we call it MV, and then there's this RFE, which is the backing itself. So while Olympus is focused on eGhost to RFE, what we should be focusing on, eGhost to market value, and we should be focusing on market value to RFV. And of course, by focusing on these 2 ratios, we indirectly focus on E goes to RFV. However, this ratio may not be important in the first place. This ratio, I believe, is way more important. Current RFV, let me open up the dashboard so I can see it. Current RFV is $35, right, per ghost, while the market value at this point of time is roughly $100. Now, the eGhost price today is $960 on the DEX. And again, the market ratio is the market value is $100 per eGhost. So that's what roughly you're looking at. And what happens, and that's interesting, that's what you guys need to understand as well, is when you're looking for 2 types of bonds, so there's a DAI bond and there is a LP bond. So mathematically, it seems like DAI bonds are actually minimizing both of these ratios. So DAI bonds will minimize this ratio and that ratio. LP bonds, surprisingly, will actually be increasing these ratios. We'll be increasing both of these ratios again mathematically. And there are certain limits. If I'm not mistaken, for this ratio in particular, I need to do a little bit more research with certain assumptions. The ratio is ranging between 1 and square root of eGhost price. So much math. So again, guys, like I'm telling you, if you're going to write this documentation, and we will, don't you think that it's going to be less confusing? It's going to be only more confusing. And this is true as the number of LP bonds is increasing to infinity. That's for the square root of E ghost. Now, one, it's going to happen when the limit of the Dai bonds is increasing to infinity. Okay? As far as, so that's for the NV to RFE ratio. That's this. Now, as far as E goes to NV ratio, we need to do more research, more modeling, and we'll report obviously this on calls and also on in the documentation. So we'll understand the boundaries designed by Olympus, and we'll also understand how to maneuver around these boundaries to maximize the potential for the protocol. So I think I'll pause here. But yeah, last week we discovered so many bugs. Well, the dev team discovered so many bugs. It's crazy. It's not even funny. Some of these bugs have been mentioned. 1 or 2 bugs have been mentioned by the community prior, but lots of these bugs have not been even found by anybody, which is quite freaking scary. And these bugs have nothing to do with technical. These bugs are just tokenomics bugs, and that just shows the genius of the dev team behind the Ghost project. Let me ask if there are any questions. Give it 1 minute for the questions, and either I'll respond. If not, we'll pause here. Again, lots of stuff's happening. Read on the stuff. But the roadmap, just to reiterate, is another probably 3-4 weeks on Sepolia, testing LP bonds probably next week. Definitely within the next 2 weeks. We'll try to do it next week or maybe the week after, and then after 3 to 4 weeks, we'll go with another test and probably on Hudi. We'll probably redeploy Sepolia. We'll give all the ETH that you guys, all the Sepolia ETH that you guys invested, we'll give it back somehow. We'll create a scheme how to do it. Probably we'll be able to give you guys a conversion back from your ETH, from your GDAI. Like you'll start selling it, so you'll get your GDAI back for ETH. And then we'll redeploy on Sepolia, and then we'll do another chain probably pulse. So I have like Sepolia, Hudi, and say pulse. And then we'll probably add Ethereum Classic later on, like around the summertime. Ethereum Classic and Gnosis and Linea also testnets just to play with everything. There are lots of updates for the council members as well as we're trying to fill additional seats. So we're going to be discussing with certain members next week. Some calls scheduled for Mondays, some scheduled for later next week regarding how to fill those additional seats. And I have some exciting kind of anecdotal stories regarding Bitcoin and UTXO bridges, and how the fees for EVMs may be low, but how the fees for those UTXO bridges are going to be potentially super fucking insane, just insane. Because one person reached out and he's asking, he's okay to pay 3%, and I'm pretty sure he'll be okay to pay 5% fee for any UTXO bridge. Imagine how much money that is for the council members and also for the validators. That's just to add the Bitcoin bridge. And then if you add other tokens that are delisted from exchanges, AK and Monero, imagine how much liquidity will flood from Monero to the bridge. And one member suggested a great freaking concept of not just bridging stuff, but loaning. So you can use Ghost. You will be able to use Ghost potentially as a loan. So you take your Bitcoins, you take your Monero, you take your Doge, and you are putting it as a collateral on the Ghost chain. Actually, on the Ghost chain, you're putting this as a collateral, and then you're getting credit from the community, and all you have to do is just pay certain interest, so you don't lose your Bitcoins. You put your Bitcoins as collateral. You're getting some free source, free liquidity, like Tether, whatever. Like you're getting Ghost token that you can then change to anything you want on any EVM. Or Tether, whatever, like to get your initial instant liquidity. And then all you have to do is just pay interest rate. There's going to be some type of market interest rate. And if you don't pay, then you lose your collateral, you lose portions of your collateral. But if you do pay, your collateral is super safe because it's all programmatic and stuff. So that's going to be quite freaking exciting. That's a great suggestion by a member of one of the whales, essentially, that he suggested last week. So stuff is looking really freaking nice, guys. We need to, my personal agenda is to focus on all the launches properly, try to fill as many seats with super qualified individuals to enhance the ecosystem with nodes and TVL. And I think we're looking super, like, more and more positive every single week. Thank you so much. No more questions. Thank you so much. I'll see you guys next week. Have a good one. Bye bye.